Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, so let's just dive in and let's talk about a few things. So earlier today, I did make a video talking to you guys about the gold standard system basically being brought back in, as major central banks have been stockpiling gold reserves for a while now. And today we're actually going to be talking about the move towards this new monetary system and where I do believe that crypto holds the key. Now, I want to give you guys a quick warning ahead of time. I will be speculating quite a bit around the BIS itself because they do, go in depth on crypto in general. We're going to be discussing that. We're going to be talking about that as well. But let's just dive in and let's discuss a few things. So first off, the entire market is looking pretty good. Now, I have been watching the indices futures. They do look a little red, so we'll most likely open a little bit bloody in regards to the indices. But I do believe that we will see further continuation upward, and we'll most likely see Bitcoin try to hit about 25K this week. If we do smash over 25K, then we will be looking for some nice higher price targets. But on the 24-hour span in regards to this entire market, we have been watching a few assets doing pretty good moves. Chainlink was one that I have been personally watching, and it has been doing pretty well. Remember, Chainlink during the summer of 2020 did do a very nice move, as that was the DeFi summer, and it looks like we are starting to break out a little bit on Chainlink. I do think that the link run ahead of us is going to be pretty monumental, but I do believe that we will see a pullback first, and then we will see that major continuation upward. Now, of course, do I think that Bitcoin could hit 25 to 28K before having that pullback? I do believe so. That is the level that I'm really going to be watching for closely around Bitcoin, and the level that I do think that we will most likely correct to is around like the 20.5 to like 20.7K region within that area. So that's what I'm watching for right now. But let's just dive in and let's talk about a few things. So here's this video that I think everybody should be paying attention to right now, and this goes in depth on, of course, the BlackRock situation that just recently happened. Shout out to Crypto Airy for this, but we do see here, I love the tech. I also love the potential price. If we are to see a $1 trillion increase in demand from BlackRock, it would probably drive the price up much higher than the doubling Bitcoin. The big players were bound to come, better sooner than later. Welcome. And yes, I've always said like the effects in crypto, the multiplier effects around price action is by how much money will flow into an asset. And also, this is why I focus on XRP quite a bit, because again, like liquidity is such a huge area to focus on. We're going to be talking about that in this video as well. But you got to remember, like, the amount of money that will actually flow through crypto is going to be revolutionary and monumental. But listen closely to this video.
And then the other reassuring piece of news recently that came out was an agreement yesterday announced between BlackRock and Coinbase. BlackRock could, through its Aladdin technology solutions ecosystem, on which $40 trillion worth of assets sit, they wanted a seamless on-ramp into crypto that Coinbase is going to provide. Some of this may have been caused by demand pull, institutions saying, hey, we want to get involved, and they're trying, but the plumbing was just too difficult. Assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there, if we just assumed it was all done in Bitcoin. So the illiquid supply, according to our estimates, is about 14 million out of the roughly, I think we're into near 19 million, 18 to 19 million Bitcoin outstanding. So illiquid, 14 million. And by our calculations, only 3 million units are truly liquid. So the demand, if we were to see a $1 trillion increase in demand, then it would probably drive the price up much higher than the doubling that I just mentioned.
And This is 100% true. Like when we look at how liquid is Bitcoin, it's really not as liquid as most people actually perceive it to be. This is why, a large portion of money flowing into it, like $1 trillion, for an example, would actually more than double the price of Bitcoin. This is where you do see quite a bit of high price valuations for Bitcoin being realized. And I'm not saying, 100 to 200K, but we could see quite a high figure, value on Bitcoin if we do see those adjustments being applied to Bitcoin. It would be, something significant for altcoins as well, including, of course, XRP. Now, let's look into this photo here because and by the way, this is a very important subject in this video, so please pay attention to this. Working in crypto is an incredible, never-ending education in how far the pendulum can swing. 2017 to 2022 here, this is from BlackRock. BlackRock CEO Larry Fink calls Bitcoin an index of money laundering. Why BlackRock is bullish on blockchain but not Bitcoin. BlackRock picks Coinbase to provide clients with direct Bitcoin exposure. Now, you see the tides turning around around crypto and, of course, even Bitcoin, if you will. But in regards to crypto, yes, we have seen, it get this massive bad name thrown around it, this entire terrible reputation that you need to stay away from it. You shouldn't even be putting any money into it. All of a sudden, 5 years down the road, mass adoption of it from these major institutional players has started. And I would say that this is basically FOMO from institutional grade area. BlackRock is a very, very high grade elite company around the asset management area, $10 trillion in value. And the reason why I bring this up and the reason why I want you guys to focus on it is just how crypto has been working within the last few years. It's getting this terrible name around it. All of a sudden, those same individuals that are spewing the nonsense start to adopt it, accept it, and of course, the efficiencies are just way too large and way too great to ignore. Now, I take you to this post from the BIS. This is from the BIS's official website. I'm sure that a lot of you have probably seen the there's a few diagrams within this that you guys probably seen. And we do see here, this is from June 21st, 2022, the future monetary system. Now, this goes hand in hand around crypto. Now, I just want to warn you guys ahead of time, they do throw crypto right down the stairs, all while, of course, putting DLT on a podium. It's pretty special here. So first off, a burst of creative innovation is underway in money and payments, opening up vistas of a future, digital monetary system that adapts continuously to serve the public interest. Structural flaws make the crypto universe unsuitable as the basis for monetary system. It lacks a stable nominal anchor, while limits to its scalability result in fragmentation. Contrary to the decentralization narrative, crypto often relies on unregulated intermediaries that pose financial risk. A system grounded in central bank money offers a sounder basis for innovation, ensuring that services are stable and interoperable domestically and across borders. Such a system can sustain a virtuous circle of trust and adaptivity through network effects. New capabilities such as programmability, composability, and tokenization are not the preserve of crypto, but can instead be built on top of central bank digital currencies, fast payment systems, and associated data architectures. Now, I want you guys to pay attention to this. So, they're trying to make this argument more so around why central bank digital currencies are 100% necessary. You need central bank digital currencies. Crypto is not the answer, and it never was. Now, that's how most people would perceive this. But to me, this just confirms the fact that, listen, proof of work and crypto itself is not the answer to the new monetary system. What is the underlying foundation in which CBDCs will be built upon. Do you know what that is? Distributed Ledger Technology, DLTs. DLTs are the spotlight. I've told you guys time and time again, the DLTs that will win are the ones that are very efficient, that are green, quick to settle payments, liquid, and of course the ones that are unlocking financial efficiencies that could innovate further within the financial sector. This is why. So, they do break down a few things within this. They do mention DeFi quite a bit. They do mention, of course, Terra Luna, or I should say Terra USD stablecoin in general. And they really kind of just, mention the worst parts of crypto, if you will. Not focusing on, of course, like the main things, but here we have what we want from a monetary system. So this is like the main key, parts to really kind of focus on. So again, like efficient. We can kind of see a few things. So safety and stability of the system. And then like as a store of value, a unit of account, and a medium of exchange, accountable through specific mandates for public authorities and through proper regulation and supervision for private entities. The monetary system should be efficient, enabling reliable, fast payments to support economic transactions, both at scale and also at low cost. Access to basic, payment services at affordable prices. In particular, transaction accounts should be universal to spread the benefits of economic activity, promoting financial inclusion. Sounds very, it sounds exactly similar to what Ripple has always, really kind of fought for around, adoption of, like, for an example, XRP. But we also do see down here, like, not least, the system must protect privacy as a fundamental right and provide user control over financial data. The integrity of the system must be protected by guarding against illicit activities such as money laundering, financing of terrorism, and fraud. And of course, we do see the entire breakdown here. Of course, like, the only two green areas for crypto are like adaptivity or adaptability. Wow, I can't even talk. And openness. Again, all of these other ones, I could think of many assets that hit all of these in regards to like a green section for crypto. But of course, you'll never hear about that. You'll only hear about like the negativity around crypto. Now again, why do I believe that they're talking so negative about crypto for the most part? Well, I think that it goes back to this. They will discuss how bad it is. Stay away from it. We will not adopt it. We will never do anything with it. And then we will see them implement it. And we're going to be addressing that and why they will. But of course, they do talk about, cross-border payments and how very bad, like how bad cross-border payments are in general. So like cross-border payments are particularly expensive, opaque, and of course slow. They usually involve one or more correspondent banks to settle a transaction using ledgers built on different technologies. In addition, a large share of adults, especially in emerging market and developing economies, still have no access to digital payment options. Which again, like when we talk about crypto, again, like here is the promise and pitfalls of crypto, more so mentioned in Terra USD. They do mention like a few other things as well, like around like regulatory clarity and stuff like that. But down here, they do kind of go in depth on why DLT should actually be more so of a focus point, which I thought was actually interesting because we've talked about DLT for a very long time on this channel, and why I do think that DLT in general is going to be like the main thing to put a spotlight on, and why like DLT technology, specifically the ones that do provide as much value as possible, as well as being like extremely green, efficient, etc., are the ones to really kind of pay attention to. And the funny thing is that down here, they where was it? I know that I seen it. I think it was after this area. Let me actually just jump to this. So first off, up here are a few diagrams. This is the connection. Central bank as a tree trunk supporting a diverse ecosystem. As you guys do see, like this is going to be the center point. You do see APIs, aka that API gateway, which would most likely kind of go back to Quant Network as the interoperability bridge. And then you do see like everything. This is everyday life. You do see music, gaming, wallets, everything that you could possibly think about. This is disrupting, everyday life at its core. You also do see a strong canopy supports the global monetary ecosystem, which again connects to everything else, with interoperability being at the forefront with API gateways. And then you do see like the center point, wholesale CBDCs, retail fast payment systems as well. And also like even a retail CBDC, which we've talked about many times on this channel, as I do not support them. But down here, they do talk about like wholesale CBDCs and tokenized money. Now, this is where they do put a focus point a little bit on DLT technology, where they are extremely relevant as, again, CBDCs. If CBDCs are not issued on a DLT technology, guess what? They are just inefficient as fiat currency. They need to be built on a ledger technology because of the efficiencies that DLT does hold. And I do think that as DLTs do continue to be adopted globally, they not only become more and more lucrative as an investment vehicle, but they also become more and more lucrative as an area for CBDCs to be issued on. And they do go in depth on the efficiencies around them. For an example, like here are some of like the benefits, much greater competition and vibrancy. open source as well, things like that. And here we have DLTs can be described in Boxy, which they do mention it as around there as well. I think that DLT in general is going to be like the main focus point here. They talk about like tokenized deposits and things like that around crypto, which we've always discussed. And here's like making use of DLT with central bank digital currencies or central bank money. In a permissionless blockchain used for crypto applications, all transactions are public. Privacy is maintained by hiding the user's real identity behind a private key. In this sense, there is a pseudo-anonymity. By contrast, a monetary system based on users' real names raises the question of how to safeguard their privacy. And they do talk about like privacy and things like that, staying anonymous and stuff like that. And then we do see one possible route is through permission DLT systems. In these systems, only select users that meet eligibility requirements can obtain access. Interactions between system participants are thus invisible to people outside the system. And they do bring up like Corda and stuff like that. To me, this is where we will be headed to. I think that we will see a full-on DLT system being ushered in, and I do think that the quant system is perfect for interoperability, and we've actually seen Gilbert Verdian also put a spotlight on DLT and why we will be ushering into that. Now, where does XRP stand? So Basel III for a very long time has been a focus point. And we do see here Basel III is a regulatory framework and extension in the Basel Accords designed and agreed upon by the Basel Committee on Banking Supervision to strengthen the capital requirements by banks and mitigate risk. This is done by requiring the banks to hold more capital reserves against their assets, which would reduce the capacity of banks to get leverage, aka liquidity. This is why I've always said pay attention to XRP. And we do see like all of the major, G10 members, for an example. Later in 2009, I expanded, the membership to institutions from Brazil, Australia, India, etc. There's so many of them. And then we do see Basel III introduced reforms that aimed at, aim to mitigate risk in the banking system. The objective behind the accord is to keep more security as the reserve before raising capital. It aims to enhance the banking regulatory framework that was prescribed in the earlier Basel Accords. It emphasized improving the resilience of banks by considering financial and risk management with stress tests in extreme situations. It ensures the strengthening of banks during times of liquidity crises and financial distress. Yes, 100% it is focusing on liquidity. The funny thing is that here we have the implementation of this. So the implementation date of the Basel III standards finalized in December 2017 has been deferred by 1 year to January 1st, 2023. The accompanying transition arrangements for the output floor have also been extended by 1 year to January 2028. This is pretty significant. Now, like I said, they put a focus point on liquidity for a reasoning. In fact, here we have overall, most measures taken by members have been capital or liquidity related, with the primary objective to support banks' ability to continue lending and providing liquidity to the real economy. Now, again, I don't like to just utilize XRP as the main focus point around liquidity, because it's not like the main use case potential for XRP. XRP is much larger within the use case potential than just liquidity provisions. But this is where we are headed. Banks need more liquidity. It's a fundamental issue that needs to be fixed because of liquidity crises and financial distress, which again accounted for the 2008 crisis. So when we look at this and we look at this new monetary system, a new monetary system will most likely need to have not only all of the efficiencies that they do mention here, but liquidity as well is going to be the main focus point in regards to this. You also need a bridge currency that could settle payments between all of these. Now again, Quant definitely allows for all DLTs to speak to one another. I do think that when we go, when we are looking at this going forward, I do think that Quant holds a very large value aspect to interconnect all DLTs. But I also do think that XRP itself could very well be the liquidity bridge between all DLTs to provide the capital for all settlements. Now, of course, I don't believe that it's going to, settle all payments, all the money, etc. But I do think that it will hold a very significant area of opportunity within the system. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys want more free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.